The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 27th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 exchange, it means we can find the gift in every set of circumstance that life is going to toss at us. And that is important, folks. So I just kind of lost my train of thought there. Sorry about that. That was doing too many things at one time. I want you to know I'm absolutely grateful for your presence. Yeah, I can just simply come back in. But I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. You can do it right now, 877-927-6648. Of course, you can always send me an email, steve@tfnn.com. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trade up 20 points. She's trading out at 20,995. The S&P is up 3.5, trading at 2391. You've got the NDX 100 0.5%. So the NDX and the semis are up strong today. They're the two strongest indices. The semis, the biggest, that's at a new all-time high. That's up $13. It's up a little over 1% out there. It's trading out at 10.22. Gold is up $2. It doesn't have a lot of movement. Won't have a lot of movement unless we start to see the yen fail. Silver's back 6 pennies. Lead the charge here. The upside, you've got Lending Tree, CoStar, ChemEd Corp, Amazon, Rogers Corp, Floor, and Decor Holdings. They're up 15.88. 1 and 11%. Rogers Corp's up 11%. To the downside, it is AutoZone leading the charge up nearly $15 or 2%. O'Reilly Automotive down $13 and change or 5%. Synchronous SNCR just getting nailed, down 50%, 49.29 to be specific. F5 Networks off $11 in Public Storage. But let's first go out to our caller in California, Garo. Garo, thanks for calling. Thanks for holding. How are you today?
I'm very good. How about you, sir?
Very good. Were you listening yesterday when I went and looked at Charles Schwab for you?
Unfortunately, yesterday I was very busy. No, I didn't listen to you. I was
no problem. That's okay. I noticed the other day you called and the message didn't get through to me, which was so I appreciate you calling back. I hate when that happens, but I know that it was Schwab that you had wanted to take a look at, so I had just pulled that chart up with many of your tools for the folks yesterday, and I know you're calling about Snap there, but do you have any questions about Schwab? Since I pulled up your template, so to speak, it happens to still be up here.
No, I got out of it yesterday before it hit the 50-day moving average. If you look at the 6 months, is on a daily chart. There is before that I got out. I'm not in Schwab any longer. I have to see that how it's going to perform. Is it going to go below the 5-day simple moving average, or is it going to go above the 50-day? If it goes above 50-day, I'm going to buy, and then I'm going to go up all the way to maybe 44, 45. If it goes below 5-day, then I'm going to short it.
Got it. Okay. Well, if you're going to short it, just watch the price level of about 37.47 to 38.10 as a level, which should be a good level of support, unless there's big volume coming out of it. So I would just add those parameters to your trading for you. So let's go take a look at what you called about this time, which is Snap, I believe. Is that correct?
Yes, sir. I need your opinion very badly.
Okay.
Yesterday, yeah, when I got out of Schwab, yesterday I bought Snap.
Okay.
On a daily chart, if you see the 5-day crossed the 21-day.
I see that.
See?
Yeah.
Yeah, at 21.24. $21.24. I bought there. I have 2,000 shares, and this is going. If it's on a daily chart, if it hits that 22.55, if it hits 22.55, I'm going to keep it until high of March of 27th, which is 24.40.
It sounds to me like a trading plan. So first, folks, for those of you that are watching, one of the first price levels that Garo mentioned, slightly different than the one that I have, but he was really referring to as a parabolic SAR dot. Mine is priced at 22.46. Garo's usual was at around 22.50 something. So we're just within a few pennies of each other. And if we see, or if Garo sees price close above that, that would be a secondary bullish message. So the first one that he was looking at was the 21-day crossing over the 5-day simple moving average. Is that correct?
Yes, sir. We saw
Okay.
it yesterday. Yeah, even if you see yesterday's at a 30-minute chart, you'll see that the first candle at the open in the morning, you'll see the candle cross that 5-day simple moving average. The value of that 5-day is 21.24. And that confirms me with the 5-day simple moving average at the 30-minute and 5-day moving average when it crossed on the daily chart between the 5-day and 21-day. So both prices were the same, so that was a confirmation for me. I have it, and I have it. I'm going to keep it until it goes up and hits the daily dot, which, if I give you the exact price, it is 22.58. That is 22.58. Yes.
Yeah, so you've got 22.58. I've got 22.46. We won't worry about those 12 pennies.
Yes.
But what I will say is, so if it closes above that, you're going to stay with the trade, and then you're going to go ahead and target the March 27th level, and the high of that is 24.40. What we do have that is at least available to us now, even though this has only been trading since March 30th, Garo, is we do have a set of daily market profiles, and the only problem here is that they're not really providing us with a lot of information regarding the structure of the price area between 21.65 and 23.85. What I mean is it's very equally balanced. But price should, if it gets above the level you're looking for, I would be watching 23.85. And I know you had mentioned the 24.40. So watch that 23.85 level. I would say if price is moving into that area with more than 48 million shares, so you'll just have to do the math on an hourly basis or something. If you're moving into that level with volume, then it is likely going to go ahead and at least tag that 24.40 level, maybe even take it out. Who knows? But that should be a pretty strong level of resistance, just simply using nothing more than the mere fact that this thing had gapped down, and that was a resistance area right at around this 23.85 range out there. You're welcome to hold on as we go to break, and if not, thanks so much for calling.
Thanks, sir. Thanks so much. Thank you.
You bet. Bye-bye. You bet. That was Garo. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go take a look at the indices, see what they're doing. Kind of flattish markets, with the exception of the semis and the NDX 100 out here right now. But nonetheless, let's go take a look at what's going on. So, after a pretty stellar week out here, we've just had a couple of days of rest, a lot of heavy lifting. I don't think that there's anything more than that to it, which is going on. But let's go look at both sides of the trade out here. First, let's take a look at what the New York Stock Exchange did earlier in the day. Looks like it came down and tested the breakout from April the 25th. Breakout just simply via the gap. Well, let me go ahead and expand this out here for you. So the top of that gap, now I'm referring to the high from April 24th, was 11,546. This morning the low was 11,545. Yeah, that's how you come back to a level of support, bounce off it, and then move higher out here. So you can see candlestick-wise, yesterday you had a nice little shooting star. Today, right now, what you really have is a bearish engulfing candle. It's not a hammer candle. Can't turn into a hammer candle. Not in a downtrend here in order for that to occur. Does that shooting star bother me? Because it's the opposite of the hammer. And the answer is no. Not in the least. However, it is a sign that the New York Stock Exchange is struggling to get over resistance. Now, resistance just being the prior swing point out here from March the 1st. So it's natural when you get back up to 100% move for the sellers, so to speak, to try to flex their muscle out here. So not unreasonable to think that you wouldn't see some type of bearish candle form out here. That's really how important both yesterday's high is, but we really call it the high of March the 1st out here, which is 11,687 in the NYSE. Does it bother me? I'm not going to ignore it, but does it bother me? No. Does it mean that the market is ready to go to the downside? In fact, if anything, folks, the actual signal that you received today in the New York Stock Exchange, we came back to a breakout area and rejected it and just simply has moved higher. If I take a look at the advanced decline oscillator reading, very bottom of my panel, 84.90, so it's above zero. Buyers are in control. You and I have been kind of watching, or we want to watch, the plus 150 area. Actually, all the today's move and yesterday's somewhat sideways-ish move out here is done is it's just opened up the door for price to just really catapult even that much higher, because we are now that much further away from the plus 150. You take a look at the NASDAQ composite. We're at new all-time highs as we're trading right now. Everything looks good there. Inside the Dow, everything looks good there. Inside the S&P 500, everything looks good there from the standpoint of the volatility index, just continuing to trade down below the bottom of its Bollinger Band. But I expect it's just going to stay in this low range out here. Be careful if you are in any of those nasty ETNs out there. Your premiums are just going to get munched away, and so forth. Just be careful inside those trades out there. Typically, the only one making out is on those trades are the ones that aren't actually trading them. But that's just my thoughts out here. So, what's the biggest concern that any of us really have? We've got a lot of earnings coming out after the bell, right? So we know that the NQs are in play out here. It means the NASDAQ, the NDX 100, the NASDAQ composite, certainly in play out here. And so the biggest concern is that we do have these open gaps. I don't care that we've got gaps. What I would be concerned with is that things could gap down and you could create these island topping patterns in the case of the NASDAQ composite and the NDX 100 at new all-time highs. So inside the NASDAQ composite, very important that price does not tomorrow gap down below the level of 6,002.65 and stay below it all day out there. In the case of the NDX, so we're going to look at both sides of the trade. We just simply have to, or we should. If we take a look at the NDX 100, the number that you and I would be watching for, let me see. Probably looks like I've got to give you two. So the high here from the 24th is 55.13 and change, and the low here is 55. Yeah, so any gap below 55.21.52 tomorrow, with price never trading up to that level, staying below it would actually create a island top out there. And then we'd have to come back and take a, now where would price fall to? I don't know. We'd just simply have to come back if that happens out there. So that's the most bearish thing that I see, is what we'll call the potential pattern out here. And I don't know which way this market is going to go. I can tell you that the signals that are out here, and that market has a lot of initiation in that it wants to move higher. Now, I don't know if that's tomorrow. It wants to move higher over the coming weeks. Somebody might say, but Steve-O, come on, let's be real here. Monday is May Day. Monday is May 1st out there. You know the old sell in May and go away and that whole shenanigans out there. Yeah, maybe. But right now what we're dealing with is a pattern that corrected, that found a bottom, a natural bottom that it was supposed to. As we came back from the Easter break, we've had momentum, initiation fees, initiation signals to higher prices that have formed out here. And I'm going to not ignore those. And instead, I'll go ahead and put that sell in May thing. It doesn't always happen on May 1st out there, or May 2nd. So be careful. If something changes, you and I, when the market gives us information, we will change that view in a heartbeat. But I cannot have the so-called negative or bearish viewpoint when all we're staring at here is a lot of bullish information. Okay, so that's in essence what we have going on inside the market. So we go take a look at some of those indices here, look for some of these things I'm referring to. Let's go take a look at the semis. Let's go see what in the Sam heck they are up to. So we'll pull the semis over here. We'll see that they've traded to a new all-time high. Likely only in leg number 3, above all kinds of support. We would change our mind if the semis traded down and closed below 1,004.32 as we speak today. You know, one of the stronger indices out here, or actually that gave you the best buy signal, is the Dow. Yes. Take a look at this. See how, you and I have taken a look at this price oscillator, and we know how important it is. And take a look at how this was able to get down to the zero line. It did this back when it was bottoming. Let me get my crosshairs out here so we get our little gun. So it was right down at that zero line on April 21st, April 24th out here. And that was the opportunity And price was supposed to come back up at that stage and test Stevie's red line. Well, when you gapped up through that red line on April 25th, that was a signal that this was time for a bull run. You can see there could still be an island top out here inside of the Dow Jones with a gap down tomorrow. But chances are, and I mean good chances, that we're going to see a run for the highs. We're going to see those highs get taken out. That's what the Dow. So the Dow Jones, which had been the weakest, is actually giving you and I a nice little confirmation signal. Now the NDX 100, that's certainly going to be impacted, good, bad, or indifferently, as we speak this afternoon. If we take a look at it, look, I can come up with a seventh wave move. I believe, though, it is not. I believe we're only in the second wave out here. I believe that pulling back and testing 5504.46, you're at 5569. That's a lot of room out there. So as long as price is able to hold that 5504 level, the NDX 100 wants higher price. In fact, it wants much higher price than where we're trading right now. C Road TFNN. Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our denners, Duffy in the den, wrote something in, and great spotting, by the way. In fact, I'm going to have to go ahead and make a copy of this chart and keep it in the archives here, because it is difficult to find the pattern that Duff Meister found. And that is this, folks. We're looking at a daily chart. And what you can see in the case of Canadian National Railway, CNI is the ticker symbol. On the trading session of April 24th out here, this thing gapped up. Now, the volume behind that gap was 1.2 million shares. It opened on that trading session, even though it was a gap up, it opened at 75.69. It closed at 75.66. So that qualifies us to have a little doji up at those highs. Now, just because you have a doji, does that mean anything? Well, when you are up at resistance, that's when those doji candles really mean something. You might say, what resistance, Steve? I don't see any resistance out there. That's the first thing. We're going to come back here. I'm going to kind of go back and forth, so that because what the market is always doing, it's really telling us a story. You and I are just simply the narrators of that story. So we come take a look at the weekly chart, and we can see that price made it back to its highs, its all-time highs, back in September of 2014. Now we know that we have a doji that was back at resistance. Now, does that mean that it is a sell signal then? The answer is no, it does not. However, that very next day absolutely gave you that sell signal, because this thing gapped away to the downside. So you've got what they refer to as an abandoned baby up at that top out there, and nobody likes to abandon a baby. But if you do, and the law catches you, you're going to get crushed. And that, in essence, is what this chart is communicating to you and I. Now, we know that this company, like many others, seem to have an impact depending on what one of the branches in our government come out with. Doesn't matter whether it's the judicial, the legislative, whether it's coming from the White House out there. I mean, but in any event out here with regard to what we're going to do with Canada, or what's going to happen with regard to NAFTA, this, that, or the other thing, what occurred here in Canadian National Railway doesn't matter. The signal is a signal. I can tell you, years from now, we're not going to go ahead and try to remember what exactly took place on April 25th. We're just going to see that you saw a gap down with volume, 3.1 million shares, creating that abandoned baby top. They're hard to find out there. So, Duff, thanks for identifying that, because then the next time I do a workshop, which will be actually 3 weeks from yesterday, which will incorporate Japanese candlestick charting into that for subscribers, then I'll make sure that we take a look at this chart and continue to watch it to see how it plays out. Now, with regard to how it plays out up here, this is going to be interesting. Here's what this is telling us right now. Today and yesterday, what we saw was prices trading below the weekly point of control. You might say, well, what difference does that make? Well, if we go take a look at the weekly, this is going to be the green horizontal lines. What you and I know, and by the way, that point of control, the center of the box right there, price is 72.92. Price is trading below that. The structure of this box is what? Bullish or bearish? Bearish. Now, I'm not referring to like bearish, like that's it, it's going to zero, just referring to a directional aspect, okay? And when you have that point of control that's close to the top of the box, tells you sellers, in essence, are in control of the pricing area that takes price all the way down to potentially 70.79. Now we turn price back on. So where is price likely headed to? Exactly. Price here suggests to us that it's headed to 70.79. Now, that may be a buying opportunity even with this abandoned baby top. Blasphemy, you say out there. How can you say that, Steve-O? Well, what I can say is, let's go look at the weekly chart. And as we take a look at the weekly chart, the last time on a weekly basis that price was up here, we mentioned that being the September 22nd, week of September 22nd, 2014, 7.8 million shares. Well, this week right now we have 7.8 million shares, and it is only Thursday. So this swing point has been tested. The high, by the way, there was 75.92. This week our high has been 76.10. We've tested a swing point with volume. Duffy, what this actually communicates to you and I, if we're going to go ahead and use some volume metrics here, this says that price is going to be back up there at some point in time. Now, from a weekly perspective, this is a very bearish candle as well out here. So the key is watching how does price handle the bottom of that weekly box. And again, when we turn that on, we're going to see the bottom is 70.79. So we want to watch that. Maybe, Duff, if I forget to watch it and you do, let me know when price gets down to that level, how it handles it. But that is a classic. That you guys try and go find those abandoned baby tops. They are not easy to find out there. Now, that was Canadian National Railway. And in that case there, we owe it all to Duff to have pointed that one out to us. Okay, let's take a look at the usual suspects, as they say. What's going on with gold? You know the answer. Not much. What's going on with silver? Well, not much. What's going on with the yen? Well, the interesting thing about the yen here, this is a 15-minute delay on this chart. You talk about points of control out here. Now, there's your Gertley buy pattern. You and I took a look at that yesterday. And if we take a look at yesterday's action, we saw price come all the way back and close on that point of control, that center of its weekly box, which, by the way, this structure is a bearish structure, or one that says sellers should have control of the price area from 112.55 to 108.87. And I do believe it is the 112.55 where the real snipers are hanging out, where gold might actually then begin to find its footing. But as we speak right now, gold isn't doing much, silver's not doing much, bonds aren't doing much. How are they going to do much when the Japanese yen isn't doing much? And by doing much, I'm saying trading the price at the place where price is most comfortable. That being the center of its box out there. That's rocking its world. So am I expecting to see much out of that stuff? The answer is no. With regard to what's interesting, though, I will say what is interesting, what isn't interesting. But what's interesting, though, is the question, will the yen actually, since it's had 3 days to try to bust through this area, will it actually go ahead and retrace now? And then just put a little bit of juice inside of gold, silver, and the mining equities. And I think the answer is yes. Now, the answer being yes is really coming from two factors. One of those factors being the GDX itself. If you and I go take a look at the GDX, here's what we know. We know that today is an important trading session. Why? Because if we take a look at that price oscillator, right, the bottom portion of my screen, we can see that it's sitting there right at that zero line. Yes, slightly below it, minus 0.02 out there, but basically right at it. What that means is that we should see Stevie's red line. Right now you see red, not green and not white and blue, but I had to change it to a color, but red, green, and blue. This is usually a pause point. This is usually where we will see Stevie's red line come together with price. Is the red line moving lower? Is price moving higher? I don't know. It's going to be one of those, but it should be a stalling. Doesn't have to take place right now today. Usually does out there. So if the mining equities are communicating anything to us, it's that, okay, probably the yen is done trying to move higher out here. It's going to go ahead and make a retracement so that it can make an A to B equals CD to the upside, a smaller one out there. And while that happens, you then would see gold get a little bit of legs. You'd see the mining equities get a little bit in the way of legs. What I don't want you to do if that takes place is to overplay that hand, because you could be bluffed, and I don't want you being bluffed. You need to see price close above Stevie's red line to start playing that long game in the mining equities. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So one of our denners posted a question. Question goes like this, if I can find it again. Says, SR silver's declined from 1865 as you thought likely, 1740-ish now. Anything you are looking at for clues of a bottom? And so let's go answer that question. Let's go see what the stock charts are communicating to you and I. Just as we looked at with regard to the GDX, right, we took a look at how its price oscillator is approaching zero. It's really at zero as we speak right now today. In the case of the current silver contract, it too is doing the same thing. It's not exactly down there. It's very close. We're very likely to see that price oscillator get to the zero line. Very, very close to it. I think we'll see it. We'll see Stevie's 3 lines here come together. They'll do a little smooching out there. Now, we can also see with regard to our Tom DeMark setup counts out here, you can see that today is going to end up being, or should be, I don't know how things are going to close, but at this stage here, pretty likely that we're going to see today become day 7 in a row with closes below the close 4 bars earlier. Well, so that's Thursday. Tomorrow, we're likely to see the same thing, price move lower, becoming setup bar number 8. Doesn't have to move a ton, but bar number 8, moving that price oscillator even closer to zero. Monday then would be Monday Fun Day, could be bar number 9, right? Actually, price doesn't even have to move that much lower, right? Doesn't have to move lower at all in order to get a TD setup 9 count out here. We're, other than some type of big, huge rally, it looks like that's what's going to happen. Now, those TD 9 counts out there, they're important. They're important because oftentimes you see price go ahead and stall at that stage, maybe even change direction. Now, it works out better typically when the 9th bar is traded with inside bars number 5 and 6 out here, 5 or 6. And in this case here, when the bottom was made, and if you're not watching us on Tiger TV, I'm referring to the TD setup 9 count that occurred back on March 14th. That, in essence, set up a bottom. I don't know where this 9th bar is going to form out here. And so we'll just simply have to watch that. You also can see that price is moving down to one of Tommy DeMark's short-term trend lines, support levels, and that's in about the 1699 area. So that is what this chart is telling us, and that is an answering the question, anything I'm looking at that could identify a bottom, yeah, I'd say putting that together, making that 100% move a move. Let's watch where bar 9, should it occur, actually trade into. That's the first thing. If we take a look at what's going on now, this is Stevie's Etch-a-Sketch silver contract out here. So this is where we put on, because we just rolled over a couple of days ago. And that's where I think using this versus actually using the July contract makes more sense with regard to the market profile. Sometimes they're the same, and sometimes they're not. Sometimes you feel like a nut. And then what is it? Sometimes you don't. Usually I just prefer to go with the Mounds bar versus that Almond Joy out there. But speaking of nuts out here, I'd be nuts to suggest to you that price in the short term may not have found a little bit of support. That's at 1731. Price hasn't hit the 1731 level. But if you take a look at this 60-minute profile, this 1 hour profile, knowing that what we are seeing inside the yen, what it is doing or hasn't been doing, and we take a look at this profile out here. This profile, by the way, has a bullish structure to it. And what we mean by that, if you look in the lower right-hand corner, you see that that point of control is closer to the bottom of the box. That's that little cyan bar. And so this says that buyers in this price range ought to be able to get price to explore 1747. So if you're an intraday trader out there and you're looking for a trade and you're looking for a reason to go ahead and take that long, just have your stop planted somewhere below 1731. You're trading at 1733 right now, give or take. And you would be looking to likely exit that trade right around 1747. That may not be worth the reward to risk for you, but that's the short-term trade setup. That's using the 60-minute chart. If and when we see price close below 1731, then you've got no friends out here in Silverland. In fact, you don't get friends until you get to the price level of 1668. You say, how could that be, Steve? Oh, I say, well, all we have to do is come take a look at that weekly chart, look at its profiles out here. This is the Etch-a-Sketch contract out here, and you can see that that was a bearish structure, right? 1839 being the top of the box, 1810 being the point of control. So no reason for price not to get down to the 1668 level. And that, my friends, is the take on what silver is actually communicating to us. Now, the secondary question looks like it came in. We'll just simply go ahead and read it live because I can't talk and read at the same time out here. It says, SR Silver, what about this? December to March 1st, silver rally, then down to 1686, low up to 1865. Now down to retest 1685 again to complete the big sideways move. Yeah, absolutely. Yeah, I am still longer. Well, let's do this. Let's do this out here. What is it I'm going to do? I want to try to clean up the chart here because let's go take a look at what John is actually looking at, and that way those of you that are watching us will be able to go ahead and put that together. So I'm going to go ahead and put this chart up. I'm going to change it to a weekly basis, right? That way it's going to be easier. We're going to turn off profile levels out here because we don't need that. So let's change it to weekly out here. And again, what John in essence is looking at in this 1686 type area here. Here is, what we've got as a potential, and I think it's real potential, by the way, is we have a larger A to B equals CD to the upside out here. And that pattern looks something like this. Now, whether price is going to get down here to the March lows in 2017, that I don't really know. If the 1680s holds, then the answer just it may get down towards that 1690 level. But this does look to me like eventually we're going to see an A to B equals CD to the upside out there, 1970. So do I see what it is you're looking at? Absolutely, positively. And we'll just be looking for some shorter-term profiles. We'll be watching what the yen is likely doing at that stage to help us figure out if the reward risk is right out here. So that, you've got trend lines that were broken. I think longer term, the price for metals or all commodities should start to move to the bullish side out here. I'm hopeful, and then again, on the other hand, I'm not so hopeful. But let's just anticipate, do you believe at some point in time that we're going to have inflation? That it's, I don't know, I'm not talking about raging out of control necessarily, but, do you believe that we have inflation in our picture? Just like, do you believe that we have higher interest rates in our picture long term? And if the answer to those questions, well, let's just forget the interest rate piece of it. But if the answer to your question is that you somehow believe that all of this liquidity that's gone out into the marketplace worldwide, and you know I was going to try to put an adjective in there, but I stopped myself because we're on, paid TV. Well, not really, but I just thought it would be courteous to not use that bomb word out there. Boy, just got off track here. Metals behave very well in an inflationary environment. That's really the point. All commodities will do well. So if your longer term outlook is that, yeah, it's going to rear its head at some point in time, and that fits with this scenario here, where gold doesn't just get back to 1970. And I'm not referring to 1970 prices. I'm talking about the price point of 2046 or 2142. That's my target, 2142. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Duffy and Arden alerted us to Grubhub. Many of you may have used it. That's the service that you would use to basically order food from, a sundry of different restaurants out there. They're popular in some of the bigger cities out there, not necessarily everywhere, but delivering food to your home, fresh and ready to go, is the wave out there. No reason to get you off the sofa, for goodness sakes. God forbid you should actually walk to your car and then drive somewhere and then walk into the restaurant and then get at least. This eliminates the need for 20 steps out there. So it's a great thing. But then even here, how about this Grubhub? They actually produce some net income. Not an easy thing to do when all they're doing is just really taking a small piece of the pie out there. But they posted $17.7 million in net income out there. Now, of course, we're not exactly sure how they got to that number, but nonetheless, you're seeing a big move, a big gap. You talk about wide-ranging bars and accelerating volume. Duffy's given us two charts out here. He's given us that abandoned baby top, one to go ahead and make sure we put that in the charts out there for what an abandoned baby top looks like. And then secondarily, he's given us the so-called wide-ranging bars. Now, the interesting thing here about the Grub chart is the mere fact that this had a nice breakaway, very wide-ranging bar with volume of 14.3 million shares back on July 28th. And what price did was it came back and was trying to just simply test the breakout area. Now, that would have been the actual high from July 27, 32.10. Did price ever get to 32.10? No, it did not. It got down to 32.83, 32.43 out there. Never really closed the gap. But here's what it did as it was getting down into that level. For those of you that like to follow those Tommy DeMark signals, it formed a nice little TD sequential count back on March 28th out there. And then eventually, looks like 1, 2, 3, 4, right about here, I'm eyeing it, April 7th, maybe it was April the 7th or maybe April 8th. Of course, using my system, Stevie's red line, it really was April 4th, where you got the signal, the confirmed buy signal inside of Tommy DeMark's system out there. So you know that you had, in the case of Grub, pulling back, even though it didn't close the gap, so what out there, just coming back to the breakout area and doing it on lighter volume. In fact, completing an A to B equals CD to the downside out here when it formed that bullish candle. So that became a real Gertley buy pattern out here, right? If we take a look at that A to B equals CD pattern, the A point was out here on the trading session. You and I looked at it September 29th, I believe. The B point November 11th. The C point out here looks like it is on the February 2nd. Makes just a perfect one-to-one. Coming back to the breakout area. This is H.M. Gertley's rolling over, saying, how does this work? So perfect with regard to what it is that he wrote about on page 222. Now, every Gertley pattern has 5 different outcomes. And this one, in one single day, basically, there we go. It looks like you got to 3 of 5 out here. Just take a look at the retracements here. The retracement being, come on, work for us. Let's get the defaults out here. Those being, come on, work with me here. The retracements of the A to B equals CD leg out there. And you can see we're already at number 3. Well, I kind of messed up there, but at the 0.786 level. So Grubhub, where's it headed to? Well, headed to Damoon. In this case here, Damoon being September 29th's high, there was only 2 million shares up there. That is at 44.58. The other possibility and likely possibility that this is actually a large A to B equals CD to the upside. Now, I'm going to give you the conservative one versus the aggressive A to B equals CD pattern. And this says Grubhub on its way to $55.60. So I say order up. Don't get off that sofa to go pick up that to-go order of food out there. Instead, use that Grubhub app. And if you don't, it looks like somebody else will. Folks, stay tuned. Your favorite polar bear in mind, David White's up next. After that, we've got Tom O'Brien from 3 to 5. Andy Heck to take it on home from 5 to 6. I'll be seeing Andy next week when I'm in Vegas. Yeah, the World Series of Poker. Steve Rhodes, TFNN. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.